All right, it looks like we're live. Look who I've got here today. He's on the desk, Rudy. We're gonna have Clive Thompson on, and also Rafie Farber is coming on. So the title today is "The Second Bank War Heats Up" as Trump looks to bring Powell and the Fed to heel. A lot of speculation that Trump wants to sack Powell. So we're going to look at that. We're also going to answer your questions. This is a good time for it because sometimes it's difficult to keep track of all the comments. So let's see. So there's Rudy. Yeah. Good boy, Rudy. Come and say hello to everyone. There you go. There he is. Uh, Happy Easter to everyone as well. Uh, my wife and I had a nice Easter lunch with a couple of friends at the golf club. And yeah, and I played golf this morning. I played quite well. So it's been a pretty good day. So there you go. You want to go down now, Rudy? There you go. Good boy. Ah, Michael Kennedy. Hi, Michael Quadman 72. Hello. Nick Greek says hello, Rudy. So he's gone he's gone back on the sofa. Andy Lee says hi from Italy. Stephen Newson says question mark question silver to explode in 2025. Uh, it's possible. Anything's possible. Timothy says cool dog. Yeah, that's Rudy. He's almost 2.5 now. Prior to Rudy, we had Billy. Unfortunately, he passed away 4.5. Well, he was 14 and a half, which is a good age for a Shih Tzu. JM says, Happy Easter, Mary from North Carolina. Happy Easter, JM. David Tesser, what did you shoot today? I was 12 over par, um, 84. I did bogey the last four holes though. Yeah, I played better today, but it's still quite very chilly here. The course is drier, but it was chilly and windy uh, here in London in Kent. Silver Drill Pickle. Hello, Mary from the oil field. Gents, Gents with me is in Australia. Says Happy Monday from Western Australia. Is the market for gold and silver open on Monday? Um, yeah, I don't think it's a holiday in the US. Here in the UK, it is a bank holiday, so probably be closed if you want to buy physical gold and silver. Andrew Watson says, Hi, Mario and Rudy from Wolverhampton. Not the usual Basingstoke. Alex says Billy was hardcore. Fletch, I do hold gold and silver mining stocks. Darren Smith says Rumpelstiltskin. So Rumpelstiltskin is here. I hadn't seen him for a while. Hi, Rumpelstiltskin. Nick Greek. Where is the best place to sell gold, like scrap gold? Um, yeah. Um, Gold Investments doesn't do that. Atkinson's bullion is good for scrap gold. Yeah, so I tried them. Golden Sun, thank you for your super chat. Hi, Jason G. What's up? Got quite a few of you here already. Paul Sargent, Belly Dance Arabia, Hio Silver is here. Mark Sneed. Dillwyn Roberts, Darren Smith. Scotland, do you think platinum is good to have, or should I get rid of it? Well, I've never really been that interested in platinum. I know it's a precious metal, but it's not really monetary, I would say. I haven't really been following it too much. Um, yeah, I mean, we can have a look later on, and we can ask maybe Clive and Rafie what they think. B2 Gold, I think I might have that stock. B2 Gold, yeah. Alex, gold pricing out the small investors, they will jump onto a gentleman's money. Silver, it's underpriced, has been for years. Yeah, that's right. It's over 100, the gold silver ratio. Steve Michels, or greetings from Central Florida. Great. Croy hello, Marion Rudy from the Netherlands. Yeah, shards do scrap gold too. I'm sure also if you want to go there physically, Hatton Garden, the jewelry district in London is pretty good too. Rich Tugas from Montreal. Hi, Rich. Bonjour. My garden. Yeah, the gold futures market opens tonight. So yeah, it's not a bank holiday or holiday in the US. It is here in the UK and I think the rest of Europe as well. The Green Manalishi says hi, Rudy. Mr. Krotos, good evening. Navy vet, well, gold is already being revalued by the market. So we're up quite a bit in the last 2 years. This is it. The reset is happening. Um, yeah, it doesn't happen overnight when it's not a gold standard where the price is fixed. So yeah, the revaluation is happening every time gold goes up, the dollar goes down, and gold goes up, of course. There might be an event that makes it go up even more. Um, and it might happen over the comment or event could happen over a weekend, and then you come in on Monday and you can't really trade gold. Everything it's nor silver, and then you have to wait to see where the price will be. And everyone who's been waiting for gold to crash and the correction, uh, they'll regret. Oh, what's that? Got some balloons on the screen. I don't know if you saw that. That's weird. Never seen that before. Oh, Rafie's here. He's coming. Still waiting for Clive. Hi, Clive. Hi, Rafie. How are you doing?
I am well. How are you?
Yeah, I'm fine. Yeah. So I don't know if you've seen the title of the live stream is about this war between Powell and Trump, and I call it the second bank war because the first one was between Andrew Jackson and Nicholas Biddle, who was the
Mm,
head of the Second Bank of the United States, and I uh, and he didn't renew the charter of the Second Bank. I'm not saying Trump is going to abolish the Fed, but he's definitely yeah, he's
yeah,
definitely unhappy with the Fed and Powell.
I wouldn't put Trump on par with Andrew Jackson. Andrew Jackson was actually a pretty good president.
Yeah, paid off the
Yeah.
national debt.
Yeah.
Yeah,
He might have he what was he? He was 1820s?
30s.
1830s.
But I think he ran in the late 20s and he lost. And he there was a dispute about that election. I think 1826 that he should have won. So it's
Hmm.
similar a bit to Trump. Yeah.
Yeah. Do we have any do we have some of his writings, and does he have memoirs or anything?
I'm not sure. I'm not sure. I mean, this is like H.W. Brand's biography. It's pretty good. And
Yeah.
it's got here some this is Jackson versus Biddle. You've probably seen this
Hmm.
here.
Yeah,
He
I think I've seen that cartoon, yeah.
he said that bankers were, they're a den of vipers or something like that, didn't he?
Well,
And
yeah.
well, let's see. Clive is on. Let's admit Clive.
Good
Uh,
evening, Mario. Can you hear me?
Hi, Clive. Yeah.
Okay, good.
Yeah.
My video just went
Oh,
off.
we can see you now.
Okay, I was wondering what happened there. I had something weird going on with, I don't know if it changed Zoom or what, but
Yeah. Have
something
you
weird was happening.
watched Rafie Bill Still? I have watched Bill Still. He's got
Actually, yeah, I have a little bit of a history with him. Nothing big, but
yeah, yeah,
he came to Israel once
yeah,
under some libertarian group that was sponsoring him,
yeah.
and he spoke, and Feiglin, the guy, the politician that I support, had an event where Bill still spoke, and and they set up a debate between me and him. Like, he's one of those guys that he has okay instincts, but his conclusions are completely crazy
Really? Why is that, Rafie?
because is this record are we recording now?
Yeah.
Oh, okay, so I mean, he was a nice guy. I spoke with him, nothing wrong with him, but his conclusion was that the problem is that money is debt, in the sense that the Fed has to buy bonds in order to increase the money supply. And we can solve that by putting the Treasury directly in control of money printing without the Federal Reserve, and just increasing,
Mm,
the amount of just completely unbacked paper, just like
yeah.
shot out into the banking system with no countervailing asset
So no
at
mention
all.
of gold or silver or anything.
No, he's totally against gold and silver. He thinks
Oh,
that's
that's saying
theft.
yeah,
Yeah, so he thinks that the government should just be in direct control of the money supply completely, and then just print money and hand it out to the banking system, and
basically
that's
he's
it.
an MMT guy.
Yeah, he won't call himself that, but like he takes one aspect of the fiat monetary system, which is debt is money, and he thinks that's the bad part. That's just
Yeah,
an outgrowth
yeah.
of the fact that they're not using real money anymore.
Yeah. Just before, I just want to show something, guys. Clive, 1 second. My cousin sent me this yesterday, and I hadn't seen it. So I made it to the Jerusalem Post back in October 2024. So that was surprising.
Oh.
Is
Yeah,
that
yeah, I spoke with
a good
that guy,
paper?
Aaron Tall. Yeah.
Is that a good paper, Rafi?
No, it's not.
No.
It's
Okay.
very bad.
Okay. But anyway, so that's not really any. Clive, you've seen
Hmm.
the title of the live stream. It's about the second bank war heats up as Trump looks to bring Powell and the Fed to heel. And I call it the second bank war because uh, Andrew Jackson and Nicholas Biddle of the Second Bank of the United States, they had the bank war. And even though I don't think Trump is looking to abolish the Fed, he definitely seems to be trying to get rid of Powell. What's your view on it, Clive?
Um, eh, well, the pressure's on, and I did read that they're already interviewing for the successor to Jerome Powell. So moves are underway to replace or to put a successor in if Mr. Powell goes. Now, legally, I don't think that he can be fired. But having said that, the pressure is on. And if Mr. Powell was asked to resign, there's a reasonable chance he would probably say, let me go gracefully, as opposed to going in a state of war with you in a year's time. So I don't know. I kind of think that if Trump wants him to go, he'll pick up the phone to Mr. Powell and say, I think you better step down now, and here's what we're going to do for you if you do it.
Yeah.
And if he is replaced, of course, what's going to happen? We're going to get an ally of Powell who'll go in place, who's going to do, sorry, an ally of Mr. Trump, who's going to come in place, who's going to do the bidding of Mr. Trump.
Yeah. And I wanted to ask you, Rafi, because it said this guy in the Telegraph says axing Powell risks an apocalyptic market reaction. Do you agree with that?
No,
Yeah.
I don't think it means anything.
Yeah.
Like what is it? What? I don't know what the premise of his argument is, but other than maybe he's trying to get clicks.
Yeah.
Is the Telegraph, is that like a yellow journalistic,
No, no.
or is that Express? I mean, I don't know my
No,
British papers very well.
the Telegraph is quite a conservative, respected newspaper. It's not
Oh,
Yelp. Yeah.
okay. No, I don't think there's going to be an apocalyptic market
Yeah.
reaction. Jay Powell has almost nothing to do with anything. I mean,
Yeah.
whoever's in charge of the money printing is going to print money when they have to, and they're going to hold back when they can. I don't
Mm,
see any difference between him and anybody else.
mm. So there's this guy here. I think he's the Chicago Fed president or chairman, whatever they call him. And I think he was in the Obama administration, council chief of the Council of Economic Advisor. And he says here that it would undermine the credibility of the Fed. And I took a screenshot of this and I posted on X. What credibility? I mean, the dollar has lost over 99% of its value since the Fed was created. So, Clive, do you think how do you think it would impact the markets if
Well, I
Powell
think
were to leave? Yeah,
if Powell leaves early, I think it would be a big negative for the markets in the short run. But then the market, all eyes would be on who is appointed in his place. And my conclusion is that, or my assumption is that they'll appoint a very big friend of Trump, somebody who's going to be accommodative and lower interest rates faster and further, or at least support lowering of interest rates, and also assist the government with its funding by buying treasury bonds. So when that's seen to be the case, they see a successor who's likely to do that. That will be extremely bullish for all hard assets, including obviously gold. But I think the initial reaction to Powell's replacement would be something of panic in the treasury market and also a little bit of panic in the stock market because people don't know what's coming.
Yeah, I think I agree with that. I'm not saying there would be no reaction, like nothing would happen, nobody cares. But yeah, probably short term, nobody likes uncertainty. People are looking to sell positions and they want to raise cash. They're gonna push up their schedule and do it sooner rather than later, and you're gonna see some volatility. But like overall, I don't think it doesn't. The market shouldn't really care who runs the Fed. I don't, what's the difference? I don't know.
yeah, I agree, and I think even if Powell were to stay in if there were a crisis in the next few months, he would step in and start cutting aggressively as well, and maybe even do QE again. Um,
I think Mr. Powell will be cutting quite rapidly now. Although we'll go into higher inflation with or at least higher prices due to the tariffs, I think he will put that to one side and say the tariffs are a one-off boost to inflation. So we're going to look at the employment, and there will be people losing their jobs. So I think he'll probably be put into a situation where we have multiple rate cuts in the next 12 months.
Yeah, I'm gonna share something that you posted, Clive, on LinkedIn, and it's interesting because I did a chart as well this weekend. It's not the same as yours, but it's similar in thinking. Could you explain to us what this is?
Hmm.
Yeah. So I've taken the gold rally. We had a rally in gold from 2010 through to about 2012 or 13, which is the on the chart, you're looking at a blue line on the left-hand side. That shows the gold rally over that 10, 12-year period, based to an index of 100. And now I've started the rally, or not started, I've started the recent gold rally, which started, I'm going to say 2001. We can discuss what date the current rally started, but let's call it 2001.
When,
Um,
sorry,
uh,
five. The blue one is from 2001 to
oh
2000.
yeah, sorry, I think of 21. So
Yeah,
2001 to 2013 was the
yeah,
first one, the blue
yeah,
one, and 2021 to present is the red one on the far right-hand side, also rebased to 100.
yeah,
So what you see is that if this rally were to have the scale and length of time that the old one had, we're right at the beginning of the rally, and we've got not only many years to go. I think it's about 6 or 7 years to go. We've also got a huge acceleration in the price, because what you can see on the chart on the left hand side, the blue chart, is that from about this point in the cycle, the price of gold started to accelerate upwards at a faster pace. So if this cycle were to repeat, and I know charts don't repeat themselves, but if it were to be the same, we would be now moving into the acceleration phase where gold moves up faster than it's been moving up in the early stages of the bull market.
and this is the one I did, Clive. And I did that actually before you posted that, because I wanted to see because I wanted to see how much of a rally we had, like from 19 early 70s to like, I think this is let me move this. This is like 1975. So that was like 483%. Then you had this correction, and we had 561%. Then we had this long-term, sorry, what have I done? We had this long-term bear market from 1980 to like 2000, 2001. And then we had another 500% gain. So the average up leg is like 515%. And to me, this looks like a new leg. So I did 2000, which is where times 515%. I got 12,300.
That
Uh,
actually sounds reasonable. Yeah.
yeah. So,
But
I
funnily
mean,
enough, that's roughly the figure I came up with on my chart as well when I extended it,
yeah.
if I redid the scale.
Yeah, I'm not saying gold is not going to correct along the way, but if you're a trader and you're leveraged, yeah, it's always going to, you can, gold might be in the bull market and you could lose your shirt. But for those of us, and especially Clive, who got a gold sovereign from his granddad back in, is it the late 60s or early 70s?
Yes, it's in the late 60s.
And
My
you still
granddad had
have
played
it.
he'd played some games with me when I was about 7 or 8, in which he offered me the chocolate bar or a pound note or a £1 sovereign, and I'd taken the wrong one, of course. But some years later, by the time I was old enough to appreciate it, that would be about 14 years old, roughly late 60s anyway, maybe early 70s. I think it was late 60s. He gave it to me and he said, "Never tell anybody." I broke that rule. And he said, "Always keep it." Well, I've still got it today. I've added a few more to it, though, so I'm not sure which one it is anymore.
Yeah,
If
yeah,
it's just us and the internet, it's not everybody.
yeah. Uh, Andrew Watson, thank you for your super chat. Uh, yeah, Rafi, what do you think? So you've got similar target, 12,000?
Yeah, well, look, I'm not so interested in the number itself. What I want to know, like what I'm really interested in seeing is by when it gets to 12,000, and it will get to 12,000 because they keep printing money. By the time it gets to 12,000, what will the monetary base look like? What will the money supply look like? What will interest rates be? Will we be in a tightening phase and a loosening? Like that's what I want to know because
Yeah,
the 1970s rally topped out in 1980 because Volcker had pushed interest rates up to 20%. put the brakes in the money supply and then just waited for, and then if you ask Ron Paul, they just waited for gold to stop going crazy, and then that was his signal that, you could start
Yeah.
printing again. So they can't do that this time. But the again, the real question is not how far will gold go, but where will the dollar be? What will the money supply be by the time gold gets to wherever it gets to?
Yeah, I was listening to he's been around for a long time. I think he was on Kitco, and I'd listened to him before. His name's Bert Domen. He's an American, German American, and he was in the markets in the 70s, and he advised his clients to buy gold in 77, 78. And then he said that in 1980 he said he told his clients to sell gold because it was going into a 20-year bear market, and everyone like thought he was crazy. And then he said after that 20-year bear market, there will be a 31-year bull market. So from 2000, he expected a 31-year bull market, and he came to that conclusion studying cycles of the price of gold, not just in the US, but also prior to the US in England. So I thought that was quite interesting because that means it's 2031, and Clive just said that he thinks the bull market could go for another 6 years. I wanted to show you guys and the viewers this here I saw on X. I thought it was quite good because someone asked, where can I scrap my gold? But well, in China, you can go do it on in an ATM. Let me put this here.
Mm,
So you put your jewelry in.
that seems terrifying to me.
So you put your jewelry in, and it determines the purity and the weight, and it pays the amount right into your bank account. I thought that was pretty good.
That looks
Amazing.
very scary to me.
Why is that, Rafi?
I would want to deal with a human, not a machine. I don't know what could happen.
Yeah.
I've had my cash eaten in an ATM once. I lost
Mm.
4,000 shekels. I got them back, but like
Yeah.
still I had to fill out papers and like and then call the bank, and then they told me to do three different things. Whatever, right? That
Yeah,
could
no, you
easily
could be
happen.
right. Yeah, I see what you mean. And I found this chart. Someone posted it. I think it was James Anderson from SD Bullion. So I was talking about this guy Bert Domen, and he looked at the gold cycles. So you can see here from 1264 how they keep devaluing gold, but nothing beats
Wow.
what's happened in the 20th century, does it?
Wow. He's got it all the way back from Henry the Third.
Yeah.
Wow.
So
I don't even remember Henry the Third. The first I remember from AP European history was Henry the Fourth.
yeah, I'm reading.
Is it Henry the Fourth of Navarre? Is that was his name? Something
Uh,
like that.
could be. I mean. And they put the prices in dollars. It says here they've adjusted the sterling price. It says sterling price converted to dollars, 1257 to 1791. Dollar price
Wow.
from 1792 to date.
Where did they get the price of the dollar in 1257? Did they have a Reuters machine back then?
No, because the dollar was a weight of gold in 1792, so they just readjusted. I think they used 485 because that was the rate that was like during the gold standard. I guess it's approximate.
Yeah.
Yeah.
Yeah, I'd like to see how he put this chart together. What data is he using? I mean, it's fascinating. I mean,
Yeah.
I'm sure like all this those the stair steps, it's the each monarch makes a devaluation. That makes sense.
Yeah, always ripping off the public, and that's why you need to hold gold. I mean,
Mhm.
some people say it's generational wealth. I think Jim Rickards, he went to Italy like over 10 years ago like Rome, and he met like some very wealthy Italian families that been around over 1,000 years. And he asked them, "What are the assets that you guys hold that you think are important?" And they said, "Land, gold, and wine."
and
Hmm.
vineyards.
Yeah, vineyards.
I'd like to show you, Mario. Have you heard of the Klondike? It's a very
Oh
famous
yeah,
river in Canada. Um,
Klondike. Yeah, a lot of
I,
gold.
I'm a shareholder in the Klondike Gold Company. This would have been made in about 1896 when there was a gold rush
Yeah.
from people going from the Yukon to Klondike to dig up the gold. And there were a lot of fortunes made, but far more fortunes lost as the people dug up the gold. And it was a lot of, there were a lot of, if you want to find a place with a lot of holes in the ground, Klondike's your place.
So how much is that worth now, Clive? That
Well, this is 10 shares
company?
of 10 shillings. Let's see how if any of your viewers can work out what 10 shares of 10 shillings are worth today.
Yeah, 10 shillings used to be 50p. So that's
Yeah.
£5, isn't it?
Let's see if anybody's. I don't see anybody answering the question
Oh,
yet on the chat.
I guess
But
that
yeah,
is it.
you've
Sorry.
Yeah,
answered it. You've answered it for them.
this
But
is beyond
the
my realm of expertise. I have no idea.
the that gold rush in the Klondike in the late 1800s, I think that was when Trump's grandfather came to, he'd just come from Germany to the US, and that's where they started making their money. They went to the Klondike.
Where is the
But
Klondike?
It's
oh,
in
it's in Canada.
the Yukon Valley
Hmm.
River, and
It's it's a horrible place. Oh, it was a horrible place to get to. I mean, the people who got there, I mean, they went through the most treacherous terrain and avalanches, and I mean, it was really an awful, extremely dangerous to get there. I'm sure a lot of people never made it when they went there, but people were coming from all around the world to dig up the gold that was supposedly there. I mean, there was some there, but very few struck it lucky.
yeah, the people who make always make a lot of money in these gold rushes. I because I've read like California Gold by the same author of this, and it's a really good one. It's about the 1849 gold rush. The people who sell all the materials, the shovels and everything, and the people who run the brothels, and they make a fortune. The people looking for the gold, very few really do well. And you guys have heard of Jack London, the author?
Nope.
Oh, he wrote The Call of the Wild. It's a really good book about yeah, and it's about the gold rush in 1896 in the Klondike.
There was a guy in the Klondike who set up a scam. He set up a telegraph office
Yeah.
so that the miners could send messages back home to the countries they came from.
Yeah.
But the trouble was, this telegraph office had no wires anywhere, so people were sending messages. Well, they weren't. They thought they were sending messages for which he was charging them, but
Yeah.
of course the messages were going nowhere. And from time to time, he'd write a return message just to make it seem like the messages were getting through.
Mm. This is a so they have a film. I recommend it because it's got a dog in it as well, The Call of the Wild.
Harrison Ford, huh?
Yeah. But it's a book, really. It was written, you see here, by Jack London. He wrote it in 1903.
Hmm.
Adventure film based on Jack London's 1903 Klondike Gold Rush. So there you go.
By the
Clive.
way, Mary, I saw quite a few of your viewers figured out that it was five
Yeah,
times ten, 10 shillings is £5,
yeah.
and someone pointed out that 10 shillings is actually 10 bob.
Oh, yeah, that's a term. Yeah, 10 bob. Yeah,
What's up, Bob?
10
It's a
shilling.
shilling, a
Okay.
bob.
It's just a
It's a
nickname.
shilling.
Like buck, 1 buck.
Okay.
John Lord, thank you for the super chat. Three wise men who have helped strengthen my financial future. Thank you. Oh, thanks.
Well,
Yeah. Dawson City. Yeah, that's in the Klondike. Oh, Bill Murphy and GATA. You guys have heard of GATA?
yeah.
Yep.
They did a conference in 2005 in the Klondike in Dawson City. And they had, I think it was one of Putin's like economic advisors. He went to that conference. So Putin, the Russians know all about the gold suppression scheme, which I think is interesting. But they don't care because they they take advantage of it by buying the physical. Let's see if, yeah, if you guys have any questions, the viewers, feel free to ask. Uh, Rafie,
Yeah.
there's a lot of people saying that gold is going to crash. There's a guy on X. I don't know if you've heard of him. He's got a lot of followers. He seems to be obsessed. I try not to like really. Where is he? His name is Gayed or something. Let's see. This
Mm.
guy here.
The funny thing is, whenever anything goes up in price, there will always be armies of people who think that yesterday's price or last week's price or last month's price or last year's price was the
Yeah.
correct one. And today's must be an anomaly and it's
Yeah.
got to come back down again to the normality that as people see it. And it's the human mind. We're always looking for patterns where they don't exist.
Yeah, he's quite upset. He says, which is more likely? I don't know who John Cena is, and gold collapses next, and I don't even know what he means by collapse. I mean, I'm not saying it can't correct, but it feels to me that he's missing the boat. He says the same people who argue gold is a hedge to the end of the world are the same people who have no idea how to grow food. If the world ends, your gold ain't edible. Well,
Uh,
I think people like us, I think it's a hedge against the end of currency, but not the world. But I agree with him. If we go Mad Max, yeah, gold won't do you any good.
You know,
I
the
mean, even in Mad Max, it will. It's just it'll do a little bit less good than
Yeah,
I don't know, being in a bunker and shutting out the entire world. Like
yeah,
what? It's not even an argument. Gold
yeah,
isn't edible. Well, neither are dollars, neither is any money, or neither is your car, neither is your house or any furniture you have. You can't eat any of that. Therefore, what? Like what? You're supposed to like live like just in a house of food or like Hansel and Gretel make it out of candle? Like, what do you take? What do you want?
yeah, gingerbread
Raffi,
house.
I can eat gold.
Yeah, yeah.
A Portuguese sardine with flakes of gold.
Well, that looks good. Okay.
Yeah.
Oh wait, it actually has gold in
Yeah,
it?
yeah, yeah.
Oh, okay. Wow.
Yeah,
Mario,
Every week you whip out something new. It
well,
surprises me.
that was a present from King Kong.
Mario's actually waiting 6 years before he opens that tin of sardines. Then he's going to throw the sardines away and sell the flakes of gold.
No, I like sardines, so I'll separate the gold from the sardines, eat the sardines, and then sell the gold. Uh, SAT Stacker, thank you for your super chat. What is most attractive now, gold bullion, silver bullion, or the miners? Thanks. I'll let you answer first, Clive.
First of all, I think you got to own a bit of everything, and I wouldn't even stop at silver and gold. You can go down to maybe platinum, for example, but and then so your first stop, you should have some gold and physical silver where you can lay your hands on it very quickly in an emergency. That's the one you never ever sell. You keep forever, unless you really have no choice. And then if you have surplus, and I know you don't agree with this, Mario, but I think one can go, you don't want to have too much in your physical possession, at least not more than you can carry. You can go to the physical gold ETFs. Of course, you want to make sure where that ETF is registered. It's got to be in a country which you trust, and they've got to store the gold in a country which you trust. So physical ETFs where they've got the gold. And then you go to the miners, and there's several types of miners. First of all, you've got the large miners who make profits for the most part. And I would say in today's environment, that's a pretty good bet because the price of gold is going up. So whatever they're digging out tomorrow will be worth more than it was yesterday. So, and it will take another 6 months or a year or 2 years before those profits start to come through to the bottom line and push up the share price, because some of the gold, maybe 50% of it, will have been sold forward. All gold miners, or I won't say all, many gold miners sell their gold, or not all of it, but some of it forward. But then you've got the more junior companies who perhaps are making a profit in some cases, but other cases, all they've got is the right to prospect for gold on the land. And they may have got the gold, they may have found it. And if they have found the gold, that can be a great thing when gold prices are rising, because the large mining companies will be looking to replenish their reserves. So they'll be buying some of those smaller companies who've got lots of reserves but no money to dig it out of the ground. And then the last thing you've got, which is really speculative, are the prospecting companies who haven't really got any gold yet, but they've got lots of people out on the ground hunting, hoping to find something, one of the holes in the ground. And that's really speculative. But of course, if they strike it rich, those are the ones which can move the most. It's not really that end of the scale is not really for me. I mean, you can have your odd punt here, maybe one out of all your gold miners, but I would much rather be at the end where they're actually making profits today. That's much more reliable.
Rafie, before you answer that, Rafie, there's another question here for you. Does Israel have any official gold holdings, reserves?
Yeah, zero.
Okay, just like Canada then.
Yeah.
All right. Yeah, Rafie, do you want to answer that question about the bullion, which you think is best right now?
Well, best is a relative term.
Yeah.
If you have all silver and no gold, even though gold is probably less attractive in terms of price movement, I would get gold now. If you have all gold and no silver, then I'd say definitely silver to me is much more attractive than mining stocks. Just because the gold to silver ratio is like 103 now, and it's almost never this high. This is only the fifth time in human history. And the first one was the first time was like 1933 when the gold was revalued from 21 to 35. It only took a few weeks for it to break back below the three digits. So look, the only thing that's holding the financial system together is the fact that silver hasn't gone crazy yet, but it's going to. It's going to at some point,
Yeah.
probably pretty soon. So I'd say that silver in terms of just raw price movement is a lot more exciting, but it's also going to be a lot more difficult to hold on to unless you have it in like a vault where it's very difficult to get at and
Mm,
you're just like holding it away no matter what happens.
yeah.
But if you're trying to use it as a trade, you're probably not going to succeed. But silver to me looks very attractive right now.
Yeah, I mean, I I agree with Rafi, and also in 2020 the gold silver ratio went above 100, and it didn't last very long. So I think we could be yeah soon to we could soon see that ratio come back down, which means silver would outperform. And the other thing I would say, yeah, I have miners, gold, silver, miners, got some copper as well. I think that could do well. And yeah, I'm not the one that thinks that wants to sell gold to buy silver. I like buying both. So that's the way I see it. Someone's asking here, what are the main causes for the gold silver ratio to get this high? Well, I'll answer that first. Hold on a second, guys. There's a problem here with my
I mean, if you want, if you while you're sorting out
yeah,
your problem, Mary, I'll talk, shall I?
yeah, sure.
That let you concentrate on your problem. So, I think that first of all, we've got a lot of interest coming from the central banks to buy gold. We've seen in we've only got the figures up to the last quarter of 2024 so far, although they're coming in dribs and drabs for the first quarter of 25. But we saw that there was a huge acceleration of gold purchases by central banks in the last quarter of 2024. We don't know yet about 2025, but I'm expecting that the central banks will be heavy buyers in early 2025, particularly because of the uncertainties regarding the US Treasury market and the tariffs and what might happen next in terms of pressure being applied to other countries along the lines of, if you want to do a trade deal with us, we want to see you supporting the US Treasury market in some way, shape, or form. Um, so perhaps before that pressure comes, some central banks are thinking we'll have a little bit more diversification and we won't keep all of our reserves in US treasuries. We'll perhaps have some treasuries from other countries, and we'll also have a little bit of gold. So I think that in the current quarter, the one we're in now, that's the second quarter of 2025, we'll probably still see another acceleration in central bank purchases. And we can kind of tell that's coming by just looking at the price. I mean, the price is at an all-time record, and yet we see central banks, at least as of the latest figure, let's say from China, for example, where we've got the March purchases already, we can see that they were paying record prices to buy gold. They simply don't care what the price is.
Yeah, one thing I noticed because a lot of people also say that silver is not doing as well because it's more of a kind of industrial or base metal, not just monetary. But I've looked at copper, which is much more industrial than silver, and copper is up like 13% year to date, while silver is only up 6. So yeah, I don't think that holds that argument. And yeah, I think Clive is right. One of the reasons gold is outperformed silver so much is because the central banks they're buying gold, not silver. And I don't think the public is involved in precious metals yet. I mean, we are here in this space. What about you, Rafi? Why do you think the ratio is so high?
I don't know. Really, I expected silver to move with gold, but then I looked at the 1970s, and I think in 1973 and then again in 76, the ratio, not that it was anywhere near as high as it is now, but it hit a high for that 10-year period from 1970 to 1980. So 1973, 1976, and then it only really started to take off in June 1979. So June, even I think July even 1979. So you only had less than a year well, for silver's real run. It was at the very end. So why was it at the very end? Because the public only wakes up at the very end of a move. I mean that's with all bull markets, whether it's .com or real estate or whatever. Like the biggest moves come at the very end of it, and that's when things start getting frothy. But the difference between a bull market and silver, or the very end of a bull market and silver, and the very end of any other bull market, is that at the end of any other bull market, the asset invariably crashes. For whatever reason, it always does it. But in money itself, if the currency cannot recover, and I don't think this time that it can, then you have, a runaway bull market in money and silver, and then it just stays there until silver recirculates in the economy to a point where it can serve as a new monetary base.
Mm.
So silver does go down, but not as a result of speculative furor dying off. It goes down as a result of the supply homogenizing throughout the economy and coming to a more where the point where the economy isn't begging so much for a distribution of a monetary medium because it has it already, and so then prices can start coming down in those terms and people can start producing things. Like once they have the money to start exchanging again, you can start production again, and then supply of stuff goes up, and then the price of silver, in those terms, starts to settle down. But it's a monetary phenomenon, not a speculative phenomenon in silver. I think this time it won't be, at least.
Yeah, so here's the chart. I got the chart from the 70s. Like silver went, I think the if the price of this here, the silver dollar, it's $1.29 is an ounce. So this is not exactly an ounce. So you can see here is 129. But yeah, so we went from below 145 in 1971, and we spiked to like 664 in 1974. And then, like you said, Rafi, from 74 up until almost like 1979, it was still in this. I mean, a lot of people that
Looks like the bottom of a saucer.
yeah, but a lot of people that bought, let's say, bought here, let's say in the top, they probably got out because they got frustrated, and then all of a sudden it just took off, like Rafi said. And I think it could be the same thing for silver, but I agree with you, Rafi, that this time around it's going to be very difficult to save the system like Paul Volcker did. Uh,
I think it's just mathematically impossible. It
yeah,
doesn't matter. It's not a question of talent.
yeah.
It's really a question of
M
look, the dollar can be saved theoretically if they just stop printing it and allow, but if you want to save the dollar, you have to allow the banks to fail. And I don't think anyone can do that without risking getting assassinated.
Yeah, and you need there'll be a Great Depression. Loads of companies, institutions will go bankrupt if you stop printing. What do you think, uh, Clive? Do you agree with Rafi that this time it will be different and no, you can't save the system?
In the circumstances in which we are, it's not possible, but there are things which could be done by the central bankers or the government of the United States to effectively save the dollar. And one of those, it's quite unpalatable for many, but it would be a question of applying pressure on the holders of treasury bonds. And I'm not talking about private individuals, but more talking about institutions like governments to exchange their short-dated 10, or not I say short-dated, their 10-year treasury bonds, for example, into 100-year low-interest, inverted commas, gold-backed, close inverted commas, bonds. Now, you and I probably would say I'm not having anything which is going to mature in 100 years with a promise to pay me back in gold. But governments might see it differently. And if that's part of the trade deal, that you've got to have these things, that could effectively ease the burden a lot because I don't know how many billions or trillions they could push onto foreign governments in that way. But the United States is a very strong country, and everybody wants to do business with it. So I think they've got some leverage there. Of course, there are other things which could be done, which have happened around the world at various points in time, such as restricting what you could do with your currency. That we could call it exchange control, but I don't think it would be called exchange control. It'd be more of a limitation in certain circumstances as to what you could do. For example, speculating against the dollar might become very difficult. You might have to have permission how you use the money. You might have to go via the central bank digital currency before you do anything. And you find that they're effectively able to control the destruction of the currency by preventing people from using their dollars in a way which would destroy the currency. So there are things which might happen, but none of them are any good for the holders of fiat notes or fiat bonds. That's why I think if you hold gold, you'll go into the whatever happens owning an ounce of gold, and we don't know what system will exist when we come out the other side. But whatever the system is, you will still have that ounce of gold, and you will be able to buy your way into some value of whatever the new system will be. So I think that's an important point for holding gold as opposed to holding a treasury bond at the moment.
Scott Lynn, thank you for your super chat. The question from him, is platinum worth holding or should you get rid of it and get more silver or gold? So I'm going to bring up a chart here of platinum that I just drew, or so here we go. And before you guys came on tonight, I was on my own for a few minutes, and I think it was him who asked or someone else about platinum, and I said I'm not really interested in platinum, even though it's a precious metal, because it's not really a monetary metal. So, but yeah, here's the chart. It does, yeah, it's not doing much. I mean, since 2016, it's pretty much in a range around $1,000. So, Rafi, have you got a view on platinum?
I think it's fun. If you have extra silver, I would and you want to free up some room, platinum is a decent choice if you just want to diversify. If it's it's more like taste. I wouldn't rely on it, but I think it's a decent bet to exchange some of your silver for platinum now because the platinum to silver ratio I think is as low as any time it was, except in 1980 itself.
Yeah,
So if you've always wanted some amount of platinum and you have a lot of silver to spare, you could exchange some for a few ounces. I have 1 ounce of platinum. I'm thinking about maybe getting two or three, but like
yeah,
I'm not gonna stack it, but I do like the idea of diversifying into some.
yeah, and it certainly looks like there's like a floor there in the price of platinum, and like looking back to the 70s, it looks like the long-term trend is higher. Clive, have you got any?
Yep. Well, when I was a boy, I remember my father used to boast that his platinum wedding ring was more valuable than gold wedding rings because at the time the price of platinum was higher than gold. Platinum is much more attractive than palladium at the moment. Palladium's suffering a bit from the electrification of cars, but platinum has got a lot of potential there, and there's a huge supply deficit for platinum. So, and as you can see from the chart you just showed, the price of platinum is way down. Palladium is way down too. So, to put it in perspective, they're both way down. But there's a lot of potential for platinum to increase in price, thanks to perhaps things like the hydrogen cars and things like that. I mean, that's not here, but it's happening as a result. They call it the hydrogen economy. So the demand for platinum is exceeding the mine supply, and most of the platinum is coming from South Africa, as opposed to palladium, which I think comes from Russia and South Africa. So it's coming from a country which has got some political instability. So in the event that there was any hiccup in South Africa supply chains, I think platinum could really, really rocket to the roof. So I think it's a good one to have in the portfolio. And again, you've got the choice of owning the platinum itself directly, or alternatively going through and buying some mining companies. And there's some very large quoted mining companies. Unfortunately, most of their supplies in South Africa, so you've got the same risk. But if you take the view that everything's in favor of platinum, you can certainly buy a mining company and do very well. I'm
Yeah.
just looking here at a report I just brought up on platinum.
Well, South Africa produces most of the platinum
Yeah.
here.
It says here, platinum shows stronger long-term price appreciation potential due to widening supply deficits and expanding industrial applications. Palladium, on the other hand, offers higher volatility and potential short-term gains, but faces long-term headwinds from automotive electrification.
Yeah. All right. Yeah, I mean,
Platinum appears more favorable for the long term, is what this report says. It's about 20 pages odd
well,
report.
someone's asking you about titanium. I haven't really looked into titanium. Have you?
Well, if you buy the miners who make platinum, you'll find that they also dig up a lot of other metals ending in IUM, like beryllium and so forth, and titanium. So you're going to get it anyway if you buy one of the South African miners. I won't say the name on the show, but you take one of the very, very large ones with mines in South Africa, and you've got it.
Yeah. So let's see if you guys have any more questions, feel free to ask. That's what we're here for as well. Someone said I hate copper. Oh yeah, Rafie, do you think China, I don't know if you follow China, but do you think they're gonna like increase like fiscal spending because there's people always going about there's a deflation in China even though their GDP is growing at 5.4%.
Yeah. China will inflate. They'll take Keynesianism to the logical conclusion of it, which is hyperinflation. That from what I understand about the Chinese way of thinking. from what I've read in their history, and I've read Frank Decoter's trilogy on Mao, the Age of Openness, then Mao's Great Famine, and then the Cultural Revolution. I mean, they're a nation of copycats. They have no originality to them, from what I can see. I'm not saying none of them do, but like as a culture, they copy, and they follow the West, and the West is now infatuated with Keynesianism, so they'll do that. They don't know anything else. They don't think for themselves. They just don't do that.
That's
So
yeah.
they'll keep printing until it doesn't work anymore, and then they're going to go hard totalitarian because that's what they do too.
Yeah, even though they do encourage the Chinese people to buy gold, which is interesting. But
Yeah, I don't know where that's coming from, but yeah, it's strange.
But this Jan Neuenhaus, he's reported something from Bloomberg. Deutsche Bank says more China clients sell U.S. assets for Europe and gold as well. So it says Chinese clients reduce their treasuries holdings in favor of European debt due to President Donald Trump's tariff policy. To me, it seems like uh, uh, jumping out of the frying pan into the fire. I wouldn't be buying European bonds, but it says European high quality bonds, Japanese government bonds, and gold are seen as alternatives to treasuries for Chinese investors. Clive, do you think that's a good idea to jump out of treasuries into JGBs or European government bonds?
I certainly would be silly enough to do it. But from a government's point of view, yes, it makes sense. So if you happen to be a central bank somewhere on the planet, and you probably, well, obviously, I'd say you're better off buying the gold, but sometimes that requires a lot more effort than buying government bonds, because government bonds is what you're supposed to do. And buying gold, you probably have to go through the legal department, the compliance department, the risk department, the management of your own central bank, because you're starting to go into what some people, or you might worry that some people in your central bank might see that as too adventurous. Obviously, not really globally, because we're seeing central banks buying gold, but there will be some central banks who are sort of saying, "Well, we'd like," people at the top were saying, "We'd like to, but do I dare to risk my job by recommending it? Am I going to be another Gordon Brown buying it at the top of the market?" Gordon Brown, of course, was the man who sold it at
Selling.
the bottom of the market.
Yeah, yeah. Uh, Rafie, yeah, what was I gonna ask you? Oh yeah, because I've seen you post on X recently about the price of gold. Uh, and of course, I'm yeah, it has gone up really sharply, 3,300. What do you think it's telling us, in your opinion?
Well, we have to look, what was it telling us in 1979, 1980? What was it telling us in 2010, 2011? And what was it telling us in 2020? The dollar was extraordinarily weak at those times. Um, and 1979, 1980 followed a period of a deflationary period because of the tight monetary policy back then. And 2011 was basically the end of the 2008 money printing spree. QE3, I think, ended. Was it? I might get the timing wrong. Did I have to look at the Fed's balance sheet? But QE3 was something like 2011 to 2012, something like that. And then it was like steady for a few years, and then gold kind of went down. But this time, I don't see how they can slow it down anymore. So what I think it's telling us this time is that we are getting ready for the climax yeah. So QE3 looks like it ended in 2014.
Yeah,
You know,
here,
a little bit of a lag there.
yeah, yeah.
But I think that.
And then there's the repo crisis here in September, and they said, and they did a bit more QE, and they said it's not QE.
Mhm.
Remember that? And this is when COVID came out, and they just went berserk. And yeah, I think that they're gonna have to start printing again.
So I think it's telling us that the final financial crisis is somewhere just ahead. Could be weeks, could be months, but it's getting really close.
Yeah. Uh,
I saw an interesting question from somebody called Joe Potter here in your chat, Mario. He said, I've heard of paper gold. I've heard there's more paper gold than physical gold. It seems odd. If paper gold goes the way of many frauds, what will happen to the price of physical gold?
to the moon.
Well, exactly. I mean, I think there is an important point to here, point to make, which is about Basel III. Basel III has been implemented by a few countries, and there's quite a few countries expected to come online in 2025. In particular, the European Union, the UK, and Switzerland. United States probably, but it's not yet in the legislation. But Basel III allows banks to treat gold as a tier one asset, i.e., as the safest, most risk-free asset they hold, which, from the Bank of International Settlements point of view, is as safe as holding physical cash for the purposes of your reserves. Now, I'm not saying cash is as safe as gold, but that's how the BIS look at it, which means that in order to qualify your gold as a tier one asset, you've actually got to physically hold it in your vaults
Hmm.
as physical gold. You can't have lent it out. You can't hold paper gold. You can't hold an ETF. You can't hold gold futures through COMEX. None of those will count as tier one assets. So what could be happening is that banks, and this comes back to the point made by Joe Potter, what will happen to physical gold? Well, we might get a situation where physical gold is trading at a premium to paper gold because it's valued more, it's got a higher valuation and a higher importance as far as the banking system is concerned, and therefore it becomes more of a rarer commodity, and people are calling in their loans, and so yeah, paper gold might be start to trade at a discount to the physical. We don't know, but that's an extreme possibility.
Yeah, there's a question here from Lloyd Divine. What is your opinion on hidden gold stocks of China, Russia, and Israel? I mean, I've I know the theory on China. There's a lot of researchers in the gold space who think China has a lot more than just 2,300 tons, that they have like at least 30,000 tons. But Russia and Israel, I haven't heard anything. Have you heard about that, Rafie?
No, I don't think Israel
No.
has any hidden gold reserves other than,
Yeah.
what King Josiah hid under the Temple Mount, 2,700 years ago.
Someone asked here, someone's saying antimony, or with all these rumors of wars. Yeah, that's a metal I hadn't heard of up until a few months ago. And I actually did a video about a company called Military Metals. And this is one of these rare earth metals that only China produces, or some other countries, and they're trying to start producing that in North America now. So that's Military Metals Corp. And yeah, antimony is really important for military uses. It hardens like bullet shells and stuff like that. Yeah. Have you guys heard of it?
I know that its symbol is SP, but I don't know why.
Yeah. Let's have a look. Clive, have you heard of antimony?
I mean, I've heard of it, but
Yeah.
God knows what it. I mean, obviously, it's what you say it is, Mario. It hardens bullets or something like that. But
Yeah. Oh yeah.
um,
SB. Let's see. Let's have a
I'm
look.
surprised. I'm surprised and not surprised, but in a certain sense, that it's only found in China.
Oh, in Latin it's called stibium, that's why.
Yeah, that's stibium. Yeah, I've got it here. Showed to the viewers. There you go. Yeah, it's like that. Stibium.
It means the Romans knew about it.
Yeah, stibonite. All right.
Most common applications are for metallic antimony. I didn't get that. What was the common application they said there, Mario?
Oh, sorry.
I just
It's
was reading
also
that.
a flame retardant as well. Like it
Okay.
stops fires. Tyler Pelletier, thank you for your super chat. He says Happy Easter. And Durarama, thank you for the super chat. Why is Basel III on its third mulligan? And what does it mean for countries like Canada? Well, I'll answer that quickly. Like Clive said on Friday, we had our chat. All these rules the from Basel III, they can't enforce them. Uh, Banks and countries can adopt them, so it's not really written in stone. Is that how you see it, Clive and Rafie as well? If you want to,
It's not written in stone, but in general and historically, major Western countries adopt the Basel rules, and the Basel III rules are being adopted, albeit that America is the standout at the moment, who hasn't yet legislated on the matter. But European Union has, UK has, Switzerland has, Japan has. And I think there's a number of other major countries around the world which are adopting those rules or have already adopted them. So it's on its way. I think it will be adopted. It's just a question of time.
it's ironic because the Bank for International Settlements, they trade, I mean, on their website, they say we help our clients. We trade precious metals for our clients, which is central banks. So they've helped manipulate the price of gold for decades for the central banks because no one can look into their transactions because they're a supranational institution, even though they're based in Basel. And it's ironic that by with this Basel III, they could actually be helping gold go higher. I mean, my wish is that there was no bank for international settlements and no central banks. Rafi, have you got an opinion on that, or you don't follow BIS that much?
Well, I read the book that you recommended by Adam
Yeah.
Rabor, and it was both terrifying and not surprising at all.
Yeah,
Um, that these are really the people behind all of the international disgustingness since basically since World War II and to now. We're still in the post-World War II period. It's just it's coming out from under us. We see Trump unraveling the political web that was weaved, post Marshall Plan until now, and that's kind of dissolving. So, the only thing that's left is the rickety monetary structure that's left over from that era, and that's about to collapse. And once it does, I don't know if any of these central bank rules in Basel one, two, three, and these regulations are going to matter that much. I mean,
yeah,
we saw during the Great Depression that the rules back then were that gold was money, and so, and that's what it was. And then people started getting off the gold standard country by country by country, uh, and that was a change in banking standards. There's going to be another one now. And when the fiat system comes apart, no one's going to care what the regulations are. They're just going to care what holds value and what doesn't.
yeah, I agree. Someone just a quick question here. Isn't it irresponsible for a country to have zero gold reserves? Of course it is.
Yes.
Yeah, of course it is. Just
I mean, I expect Canada is thinking, what are we doing with no gold now and holding all these treasuries? Now we're in a trade spat with the United States. Shouldn't we have had a bit more gold?
in talking about Canada, they have their general election, I think, next week. I think, is it the 27th or 28th of April? And yeah, so we're up. The time is up. Just one quick question because I saw this question. I know it's a silly question, but just do it anyways for fun. Rafi, where do you think the gold price will be at the end of the year?
End of the year,
Yeah.
um, I don't know, 8,000.
All right. Clive?
Um, I'm going to go for 4,000.
I'm gonna go for 13,650.
Okay.
All
One
right.
Wow.
dollar.
All right.
Just to sound a note of warning on everybody's predictions, I did back in the 1990s, maybe it was, no, it was 2000s, early 2000s, win a gold coin as a prize for getting the price of gold absolutely spot on a 1 year forward prediction on an internet competition.
Okay, good.
And you won?
I won the gold coin. It was a random stranger. I mean, I never thought he'd pay up, but he did.
Wow.
Hmm. All right. Clive and Rafi, thank you for coming on the channel. It's always great to have both of you on. And the viewers as well, thank you for uh yeah, for being here and participating. Oh, someone's saying why that price forecast? Well, I met the gnome from Zurich. I went to Zurich in November to a mining conference, and he's into Elliott wave, and he analyzes the waves all the way back hundreds of years, and he thinks gold is going to 13,650 this year. So that's his prediction.
Okay.
There you go. All right. Thank you, everyone, and I'll talk to you soon. Let's end the live stream here and stream. All right.
Thumbs up.
Yeah.